Saturday, September 1st, 2018, Monaco 64, home of alternative economics and contrarian views. This morning, I just want to talk about a lot of the charts that I think are important. As many of you know, I worked in the city of London as a futures and options broker for institutional clients. I used a lot of technical analysis and fundamental analysis to analyze the markets and try to help my clients navigate through the market, so to speak. I know that markets are random, very random. Technical analysis doesn't always work. Fundamental analysis is very difficult to time. Basically, it's looking at what's happening geopolitically, politically, economically, and trying to decide where markets are moving. Technical analysis is more looking at the charts and the price movements. But I want to quote from a book that is very interesting and I've talked about to you already, called The Triumph of Gold by Franz Pick, Dr. Franz Pick. And this is what one of his best friends who wrote the introduction, Dr. Henry Jarecki, said in the introduction, and I'll read from it. True enough, he predicted, or said he did, the 1926 devaluation of the French franc, the 1931 devaluation of the British pound, and the meteoric rise in gold that emerged in the late 60s. But those predictions were not, when one knew him, predictions at all. They were rather the words of Hosea, declaring that the children of Sodom and Gomorrah were behaving badly and would thus come to no good. They were not, any more than Hosea's words were, practical guideposts. So that's what I wanted to say. Yes, sometimes we try to predict things in the short term. Gold is going to 2,000, silver is going to 50. But for me, holding precious metals and also looking at the other markets and other currencies, it's more a matter of also looking what the behavior of the actors in the market, the actors in policy making are doing. And it's very difficult to say that what our monetary and political masters have done in the last 50 years will come to any good, just like Hosea said about, said in about Sodom and Gomorrah. So, and what Franz Pick used to say, it's not that you're predicting, it's just that it will come to no good. The amount of debt that has been created, and that's the key. It's all got to do with the debt, because the debt has been money for 50 years. Especially in the last 10 years that they've gone on steroids. Central banks have created money out of thin air to huge proportions. It's never been done before, especially, well, it's been done before locally, like in Weimar, Germany, Zimbabwe, South American countries, but never through the major reserve currencies of the world, like the dollar, the euro, the yen, and the pound. So it will come to no good. We know that. Sometimes we do try to do it. Well, you see a technical formation. In the short term, we broke a neckline, or we're going to go there and stuff. But in the longer term, I think we know it's going to end in tears, because we can't behave as a group or society like we have in the last 50 years, and expect things to continue to go well, or not to see any consequences to that behavior. And the other thing that Franz Pick said in the book is that every fiat currency is a creation of government, and government always is human nature, always corrupts things. So the eventual value of fiat currencies will always be to go down. And that's what we're seeing in the emerging markets. That's what we've been seeing in the dollar since 1913, when the dollar became well, started on its way to a fiat currency. So yeah, I want to look at quite a lot of charts. I haven't looked at charts lately, at technical analysis. It's more a look at the charts. I'm not trying to guess anything, but I'm just going to show them to you so you can have an idea of what's going on and where we are, and you can decide for yourself if that old saying about they're going to come to no good, Hosea's saying, applies to the current monetary system. I'm going to look at the emerging market currencies. I'm going to look at the Italian 10-year yield, gold, silver, the NASDAQ, quite a few charts. And I also want to look at some cryptocurrencies. I want to look actually at the Ethereum price of EOS. Because some of you know I am quite not involved, but I've put quite a bit of my money into the EOS project. And it went to mainnet beginning of June. There's a lot of how can I say, polemic about EOS, if it was going to do well. It's the main competitor for Ethereum on the blockchain, and I just want to show you a chart of how EOS has been doing against Ethereum, its main competitor. So let's start with that first, and then, which is a bit different. So I just want to show you first this Ethereum EOS chart. So this is the EOS price in Ethereum, and it goes back, this is from oldcoinindex.com. And it goes all the way back to just before November last year. And you can see that EOS has been doing, fairly well. It topped just before the beginning of May there, and it came down after, and then it went up. And then when it went mainnet, it came down again. And recently it hadn't been doing very well with all the cryptocurrencies going down. But in the last few weeks, few months, or month or so, it's been picking up. So I'll show you the short-term charts of the Ethereum EOS, or EOS in Ethereum. Since the middle of August, it's really been picking up from around 0.016. We're now at 0.023. So what's that saying? Well, it's saying that EOS is making ground against its main competitor. It's still early days. Does that mean that it's gonna wipe the floor with Ethereum? No. All I'm saying is that I think it's done really well. It's been around in functioning, the blockchain, since middle of June, and it's showing that through the market that it's doing well. But we'll still need to see, how the community grows. So that's EOS. I'm holding on to it. I'm getting a lot of airdrops, which I'm keeping. Some of them are not worth much at the moment, but you never know. And if you don't have to pay for it, it's fine. And there's something else also called an air grab now, which you have to grab. They don't drop it for you. It costs very little if you have EOS. And I've just learned about that. That's the other thing with cryptocurrencies. Don't just listen to me. You need to go on the Telegram groups, listen to other videos. I don't concentrate entirely on cryptocurrencies. I'm not a expert. I cover more markets in general and precious metals. So you need to keep abreast, because things change very quickly. That's my advice. So now let's go to the other charts. And I want to start with the Brazilian real chart. Some people have asked me, because I grew up in Brazil and so on. And one thing I would say, the Brazilian real yesterday rallied quite a bit, mainly because there is a rumor that the an electoral court in Brazil, the Supreme Electoral Court, was going to ban Lula, the guy who's in jail, former president, from running. And I can tell you, looking here at the Brazilian paper, O Globo, one of the major newspapers in Brazil, and I haven't translated it because I can translate it for you. So it says TSC, which is this Tribunal Superior Electoral Court, has decided to ban the candidacy of Lula for president. It says from the 7 ministers of this tribunal, only one voted for Lula to allow Lula to run for president. So it looks like he's been barred from running. So I would expect maybe the Brazilian currency to recover, keep recovering, or maybe yesterday was more of buy the rumor. We could see it even sell off on Monday. I don't know. But I'll show you a chart here of the Brazilian currency, and that's going back to the beginning of the century, 2002, right? And you can see how important these levels here are. It's been there before. Back in 2003, 2002, we almost went up to 4. And then in 2015, we went above 4. And right now, that's where we are. It looks like a teacup and handle formation, which is very bullish or bearish for the real. Don't forget, this is the dollar in terms of the real. So if it goes up, it means the Brazilian currency is going down. We'll have to see if right now this chart is telling me that things are gonna get a bit, how can I say, unstable in Brazil, even though a lot of the instability was because the market didn't like that Lula was going to run for president, and now he's been barred, but we'll have to see. So that's the Brazilian currency. So now let's look at another emerging market currency that's been coming, this week has come to the fore. It's the Argentine peso. It's that old story that Mr. Pick says. The only, fiat currencies are legal creations by states or governments. And governments, the best thing they do is like destroy through war, tax or steal. Their governments, for some reason, they get power, and power corrupts. And it corrupts even their currency. So this is another example of that. And you can see how the dollar, you have to reverse this chart to see how badly the Argentine currency is doing. So there's another sign. Is this going to be just a emerging markets problem, or is it going to, how can I say, spill over and create contagion throughout the world? We don't know, but right now we're in the season for a crisis. We're entering the autumn equinox, which is September 21st, and apparently it's one of, according to Mr. Pick, Dr. Pick, who studied markets for many years and currencies, a lot of the, for some reason, a lot of instability in currencies and markets happened during this period. So that's the Argentine peso. In Europe, in more, how can I say, mature markets, we have Italy, which is right now the canary in the coal mine. We have the Italian government coming back to work. They're supposed to draw up a new budget. There's conflict with the EU. The EU, of course, doesn't want Italy to spend too much. And the thing is, the euro, Italy doesn't have a lira. If it had a lira right now, the lira would probably be suffering like the emerging market currency. So we have to look at the Italian government bond yield, the BTP 10-year yield. So when the yield goes up, it means they're selling the Italian bonds. And I brought this chart going back to 2012 when we had 2011-12 when we had the European sovereign debt crisis. You can see that Italian yields got up to 7.5%, and they had been as low as 2 or 3 percent a few years before. And then, of course, the ECB and Mario Draghi said, we're going to do everything it takes. We're going to throw the kitchen sink. We're going to start binding these bonds. And that's why they've been able to postpone that European debt crisis. And I say postpone because these things, you can never keep these things from happening in the natural scheme of markets and economics. People can't, Mario Draghi is not King Canute. He can't try to stop the tide, and it looks like he has for a while, but he won't succeed. So right now, this is what's happening here. Italian 10-year yield closed on a closing basis. It's the highest it's been since 2014. So it's it got up to 325, I think, this week. Closed around 322. Earlier this year, it did go to almost 340, but that was intraday. So this is something to look at, and it could move very quickly. Believe me, if things got bad. We saw back in May, end of May, how it moved really quickly. We went from a yield below 2.5% to almost 3.5% in a matter of days. So that's something we need to keep an eye on as well. As I'm in the UK, a lot of my viewers are in the UK. I want to look at the British pound, and I want to look at a long-term chart. It's a monthly chart going back 20 years, just to show you that all the talk of Brexit is, in my opinion, a lot of it is a distraction. Because if you look how much the pound has dropped since 2000, end of 2007, beginning of 2008, most of, a lot of people say, well, the pound is down where it is, because of Brexit. But look where we were in 2007, above $2. And look where we were just 2 years before Brexit, just above 170 in 2014. Since Brexit, really, we have come down, but most of the damage was done before that. So keep in mind, and the technical picture doesn't look good. For the pound, it's a fiat currency. Again, what Dr. Pick said about fiat currencies. So that's the pound. Let's look at the dollar index. And a lot of people say that the dollar index has been rebounding. Well, it's been rebounding really since April. They say it's because the Fed is raising interest rates. Partly it could be, but I think it's more because of what's happening around the world. Other currencies are worse than the dollar, and it's making the dollar look better. Because if you go back to December 2015, when the Fed started raising interest rates, the dollar index was almost around 100. It was around 97.50 or thereabouts, or even 98. And right now we're at 95. So if anything, since the Fed has started raising rates, the December 2015, the dollar's gone down. And you can see now that the dollar rally seems to have stalled, in my opinion. We'll have to see. But very soon, I think the Fed's going to start pointing towards a cessation of this policy of increasing rates. And I think all the hikes that are expected are already priced in. So if anything, I don't see that much upside in the dollar anymore. It could go a little higher. Let's have a look at gold, of course. This is a short-term chart, daily, and this is where we are right now. We've broken through that trend line. It's very short-term, of course. Anything could happen. We did close just above 1200 yesterday, as you can see, 1201. And now the gold-silver ratio, that's really, it's kind of surprised me, but because I thought 80 would be a key resistance, but it's even gone higher. It's 82.60 right now. But as you can see, going back 30 years or, 25 years, sorry, we are at levels that are extreme. See, in 2003, when silver started its move higher towards 2008, That's where we topped around 81 in 2009 when we had the big correction in the precious metal. We topped around 80 as well. So right now we were at some level, at a level that is quite extreme. So that's the gold silver ratio. And then I want to look at the NASDAQ chart, and I'm going to show it to you. To be fair, I'm going to show it to you in the geometric chart and the logarithmic chart. So this is the geometric chart going back to the late 80s. It's a 30-year chart, monthly chart. And I mean, there's nothing else to say about it. A picture tells 1,000 words. I mean, are we really oversold in the NASDAQ? Is it time to buy? I know it's kept going up, but that's the NASDAQ geometric. Let's look at the NASDAQ. Sorry, that's the, geometric. Let's look at the percentage logarithmic chart. Yeah, it's also looking very bullish, but not as bad, right? So 30, it's a monthly chart as well, going back to the mid 80s. And then I want to show you a gold chart, and I'll show you the geometric logarithmic chart of gold, just to show you how gold basically is it's just been protecting you against the inflation we've had since the fall of Bretton Woods, 1971. You can see, I mean, this is also another, a picture tells 1,000 words. It's protected you. That's what I wanted to talk about today. It's going on for a long time. Well, it is in the US a Labor Day weekend, so you might have more time to watch the video. I'm looking to do a live stream later on tonight, probably around 8 p.m. or maybe 7 p.m. London. Don't want to do it too early so we can get people in the West Coast. But as it's the weekend, I think it should be all right. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.